All right, grade 12 SYSC economics students, listen up. Consider this your definitive, absolutely no nonsense guide to securing full marks on a classic board exam question. Today, I'm stepping into the shoes of the elite evaluator. We are going to look at exactly what you need to write to master question 2, the precautions in the value-added method of measuring national income. We're cutting through all the noise, decoding the examiner's rubric, and focusing entirely on maximizing your score. So get your notes ready because we're jumping straight in. 3. That's the magic number. 3 marks. Now, I know what you're thinking. 3 marks might not sound like a huge mountain to climb, but in a high-stakes economics board exam, these 3 marks are literally the difference between a good score and a flawless one. The thing is, these are 3 easy, guaranteed marks, but only if you play by the strict rules of an evaluator. We don't want vague paragraphs. We want precision. We want to see that you understand the fundamental mechanics of what actually adds value to an economy in any given year. Okay, so before we even list a single precaution, you've got to arm yourself with the golden keyword. This is the exact phrase examiners are desperately scanning your paper for: imputed value. If you don't use this word, you are just leaving points on the table. So what is it? Imputed value is simply an estimated value assigned to goods or services that are produced, but for whatever reason, they never actually get sold in the marketplace. Think about a farmer, right? They grow grain, but they keep a portion to feed their own family instead of selling it. That grain was still produced in the current year. It absolutely added value to the economy. But because it bypassed the open market, it doesn't have an official price tag. So we have to impute, or basically estimate, its value based on what it would cost in the market. Keep this concept front and center. Section 1. The must includes the do's. Now that we've got our golden keyword down, let's talk about what actually goes into the calculation. These are the items you must explicitly state are included in the estimation of national income by the value-added method. When you write this on the exam, you want to be authoritative. Be direct. There are 3 mandatory inclusions you need to memorize. First up, like we just talked about, the value of goods produced for self-consumption. The classic textbook example is the farmer's grain used for their own family. You must include it using an imputed value. Second, own account production of fixed assets. Say an entrepreneur builds their own factory or a household builds their own residential home. That is a massive addition of value to the economy, so it absolutely gets included. And third, the imputed rent of owner-occupied houses. Think about it. If you live in your own house, you aren't paying rent, but you're still consuming a housing service every single day. To keep the accounting fair, we estimate what that house would rent for on the open market, and we include that imputed rent in the national income. For all 3 of these, you have to tell the examiner that they are assigned an imputed or estimated value.
Section 2. The must excludes. The don'ts.
All right, pivot sharply with me here, because knowing what to include is only half the battle. To secure those full 3 marks, you have to prove you know exactly what does not belong in the national income calculation. Including these next items by mistake will definitely cost you. Here are your 3 key exclusions. Number 1, the services of housewives. Number 2, the sale and purchase of existing or secondhand goods. Think old cars, old paintings, stuff like that. And number 3, the sale and purchase of financial assets, specifically bonds and shares. Now, a rookie is just going to list these 3 things and hope for the best. But an elite student, you know that just listing them gets you exactly 0 marks if you don't explain the economic reasoning behind the exclusion. So let's talk about the why, because that is the whole ballgame. Let's drill down into the exact keyword justifications the evaluator requires. Why exclude the services of housewives? Well, because these services are done out of love and affection, they're produced and consumed at home, and they never enter the marketplace. What about secondhand goods? Why are they out? Because national income measures current production. An old car was already counted back in the year it was originally manufactured. If we count it again when it gets resold, that's double counting. It hasn't actually contributed to the flow of goods and services in the current year. And finally, why exclude bonds and shares? Simply put, they are mere paper claims. Buying a share doesn't magically produce a new good or service. It literally just reflects the transfer of ownership of an asset from one person to another. Memorize these specific justifications: love and affection, not current year's flow, and mere transfer of an asset. Section 3, beating the examiner's traps. Okay, you've got the basics down, but we aren't settling for basic. We're aiming for perfection. This is where things get a little tricky. Evaluators love to test if you actually understand the core concepts, or if you just memorized a list the night before. They do this by throwing in very specific nuances to trip you up. Trap number 1. We just established that the services of housewives taking care of their own kids are excluded, right? Done out of love, no market transaction. But what if the exam asks about a commercial daycare center? Boom,
Suddenly that isn't included. Why the difference? Because a commercial daycare is a recognized business providing a service. In the marketplace, it is a current productive service. The physical action is exactly the same, watching a child, but it's treated completely differently based purely on whether it's a market transaction or an act of love at home. Don't fall for that trap.
And that brilliantly brings us to trap number 2. We know the sale of a bond or a share is excluded because it's a mere transfer of an asset. But what about the broker, the person who actually facilitated that trade? The exam will try to get you by asking, should the broker's commission on the sale of shares be included? The answer is a resounding yes. The bond itself is just a piece of paper, but the broker's time, their expertise, the effort to execute the trade, that is a newly produced service in the current year. And hey, the exact same rule applies to secondhand goods. The old car itself is excluded, but the commission paid to the used car dealer, fully included. It represents a current productive service. You have to clearly distinguish between the asset itself and the service provided to move that asset. Let's lock this all in. If there is one overarching golden rule I can give you as an elite evaluator, it is this. Never state an inclusion or exclusion without its economic justification. Let me actually say that one more time for the people on the back. Never state an inclusion or exclusion without its economic justification. If you write exclude secondhand goods, you're going to get a fraction of a mark. But if you write exclude secondhand goods because they do not contribute to the current year's flow of goods and services, having already been counted in their year of production, well, you just secured the full mark. Do not make the evaluator guess if you know the reasoning. Put it right there on the page.
All right, I want to leave you with a quick test to make sure you are razor sharp for exam day. Imagine you're sitting in the exam hall, clock is ticking, and the paper asks, would you include the purchase of a 5-year-old tractor by a farmer in the calculation of national income by the value-added method? Think carefully about everything we've just covered. Think about the year of production. Ask yourself, is it a current addition to the economy's output, or is it just a transfer of an already existing asset? If you can answer that confidently right now, using the exact economic justification, you are fully ready to claim your marks. Keep studying, stay focused, and go completely ace that exam.